Welcome to the deep dive video. This video is designed to go over the charts that I've looked at over the past week but did not use in any of the daily video updates. Some of these charts I may have used once or twice, but I didn't use them all that much, so I wanted to make a separate video just showing all of these other charts. Sometimes we can still get some insight and information by looking at them, even if they aren't really telling us anything at the current time. This is being prepared for Monday, April 10th. The first chart is called the VIX range. And I have the VIX plotted on this chart, but it's invisible. And over top of that, I have a 50-period exponential moving average. Way over on the right-hand side, you can see this is the current range, roughly 27 to 28 on the upside, around 20 or a little bit below to the downside. We have changed over a period of time, and this gives us an idea when the VIX is giving us a very high reading or a very low reading overall. We can base that on a historical measurement that is more dynamic instead of just using the static numbers of 20 to the upside and 12 to the downside. This next chart is also of the VIX, and down below is plotted an RSI 9 period on the VIX. This goes in the opposite direction of price. So as the VIX has been going down, as the market's been going up, the VIX has also been going down, but we're not getting to an extreme negative reading currently. This is a much longer look at the equity put-call ratio, putting a 253-period simple moving average to give us the overall direction. Right at the beginning of 2022, this started to turn and go up, and the market's been having a lot of problems ever since then. When this turns and starts to go down, that will also dictate a more positive environment. This is another measurement of the VIX to the S&P, and it's a correlation chart. Right now, we're not really getting any reading from this chart. When it spikes up, sometimes that tells us that the market is in trouble and possibly hitting some kind of a bottom, and we tend to look at this as a contrary indicator. We also look at the retracement going back to the all-time high set in early January 2022. Currently, we're down 14.81% from that high. Over on the right-hand side, you have the current closing value. This is another thing that's been interesting to see lately, is that we're dancing around this 4,000 level. We've crossed above and below it many times, and we're not that far away from it currently. This doesn't really tell us anything other than to go, oh yeah, we've been around 4,000 quite a bit. This is another new chart where instead of using Fibonacci retracement levels, I drew some quadrant lines on here. We go from the COVID low to the all-time high, and then this is separated into 4 different zones. Notice how we hit this 50% retracement at the October low, and we've been bouncing back up. We've been having a really hard time breaking through to the 75% level. We came back down. If we continue to go up, we might hit some overhead resistance at this 75% level again. This is very similar to Fibonacci retracements, where we also saw that 50% retracement from the COVID low to the all-time high. Looking at the technical alerts, this is at stockcharts.com. Every day, these are automated technical signals that are generated when something significant happens, either in an index or in a sector in the S&P. We read this from the bottom up. The first thing that happened right after the open, the discretionary sector had a bullish crossover from the 50-period moving average crossing over the 200-period moving average. And discretionary has been having some weakness lately, so to see this positive action is a little bit more encouraging. Staples, which had been holding up really well, they're coming down from a BPI reading of 70. Now that 70 is positive, but the fact that they're dropping now is considered negative. We also had where the NASDAQ was below 11.9, then it bounced back up, it crossed above 12,000. The S&P did cross above 4,100, crossed down below it, only to close above 4,100 in Thursday's session. So these can be useful just to point out little things that are happening in other indexes as well as other sectors. And they're available for each day. I just have the last trading day, which in this case was Thursday's trading day, displayed on the screen. The whole list would take up multiple screens. Then we take the 5 indexes that we look at, the Dow, the Qs, the S&P 500, the mid caps and the small caps, and then rank them according to an unemotional sector score. Coming in first place this week are the Qs at 90.4. They had been doing really bad going back into the early part of the year, but now, as the tech and communication sectors have been doing really well, we're seeing the NASDAQ 100 really start to climb. In second place is the Dow at 79.6. It's been holding up fairly well as of late. In third place is the S&P 500 at 76.6, also showing some improvement. The mid-caps are really falling down, giving a score of 21.4. And in last place this week are the small caps, which continue to show a lot of weakness, where earlier in the year they were doing about the best. Then we have some short-term charts to look at. This is a short-term rainbow going from 10 periods up to 50 periods. Price is still above all of the moving averages, and if we start to fall back down, one of these lines may act as support. In the intermediate term, we have the standard deviation. We're just about on the moving average right now, which means we're not too far above or below the average price, so we're not deviating. This is the Carner's RSI, which behaves just like an RSI. We have extreme positive or negative. When it's above the dashed line, that's positive, which is what it is now. If it drops below the dashed line, that is more negative. In addition to the short-term rainbow chart, we also have an intermediate-term rainbow chart. This chart measures 50 periods all the way up to 100 periods in its simple moving average, and price continues to be above. And these are starting to smooth out a little bit in their bands, and that could be suggesting that things are turning more positive. We also have ease of movement. On top is an equivolume chart, which tries to combine candlesticks with volume into one chart. When they're green, that's positive. When they're red, that's negative. The ease of movement attempts to measure the path of least resistance without an increase in volume. Just what direction does price want to go? And we tend to be positive overall when we go back 14 periods, but it's not really telling us other things that we don't already know. Also, this chart is a 20-period simple moving average of the open, high, low, and close. Sometimes when we're moving up and we fall back, one of these lines may act as support. When we're going down and then bouncing back up, one of these lines may act as resistance. The Sean trend meter, after giving us a pretty extreme reading, has now fallen back and is no longer extreme. Even though it's declining, it's still positive overall. Then our moving average study, our 20-period moving average, did give us an extreme positive reading and then has dropped back down. We're pretty much flat, but still above 50 with the 50-period moving average, and we're declining slightly with the 200-period exponential moving average. We also have a longer moving average study with the 150 and 200. We're going pretty much sideways with the 150 simple moving average and declining slightly with the longer term 200 period moving average. This chart just measures how far away are we from the 200 period moving average, and it's green and going up when we're above the 200-day simple moving average. The point and figure chart didn't have any additions to add or signals to generate. It's still positive overall with this blue line underneath price. When we go up, that adds X's to the chart. When we go down, that adds zeros. And then some long-term charts. We have a 50 through 250 period rainbow chart. Price continues to be above all these moving averages. The longer we can stay above that, the more these lines will become untangled and start moving in a more uniform manner. We also have Special K, which is a long-term oscillator. We are turning up, but we're below a declining moving average. If we can cross above that, that would be much more longer-term positive. You'll notice right at the beginning of 2022, that's when we crossed over negative, and that's when the market seemed to really hit some problems. If we can come back and cross above that, that could be a long-term buy signal. We also look at the number of stocks in the S&P 500 index that are above their 200-day simple moving average. This is not really advancing all that much. What we're seeing in the market right now is there's a few of the really big companies and they're tech companies that are leading the market higher. And so we're seeing other stocks really lagging behind. In the latest reading, this actually ticked down on an up day. So we want to keep an eye on this because we like to see internal strength in addition to just price going higher if we're bullish, or we want to see weakness in this chart and price going down if we're bearish. Looking at the broad market, I have one chart to show you just because I can't use this. The Vixen, which is the VIX for the Qs, or the NASDAQ 100. The bar chart is pretty much useless, where the line chart does show that we're declining, and that pretty much matches up with what we're seeing on the VIX that measures the S&P 500. Two rate of change charts, they're both based on 250 periods. They're turning back up slightly and showing some improvement on this chart, and then going back all the way to 1980. It's hard to see, but we are showing some improvement there. So thank you. I hope you found this helpful. Please feel free to check out the daily video, the weekly video, the intermarket analysis video. In addition to this video, I try to make a real comprehensive analysis of the market through all of these videos. I hope that you're having a very nice Easter, and I will talk to you in the next video.